In this edition of INN CEO Talks, Andrew Phillips of Lithium Power International of Australia joins me to discuss the company's Chilean brine project. Andrew, welcome. Thanks for joining me.
Thank you, Stuart.
Let's start at your Maricunga Stage 1 project in the Lithium Triangle in northern Chile, which is right up there next door to both Bolivia and the northern border of Argentina. Tell us about that project.
Indeed, I will, Stuart. So first of all, I guess in many ways, Lithium Power is on the ASX, listed on the ASX in June 16, and our flagship project is the Maricunga Salar, which is on the Lithium Triangle, as you said, on the Chilean side. The access is fantastic with the main highway between Chile and Argentina going past our back door. The project itself is a JV company project of which we own 51 or 52% in round numbers. LPI owns 52% of the JV company, which is called Milan Isolo Blanco, MSB. And the other two partners is a private office in Chile. Martin Bordeaux is a very well-known businessman. He owns 32% through that company. And the junior partner of about 17% is Bearing Lithium, a TXSV listed company, BRZ is their code. So we farmed into the project we signed the deal in January 17, and we have spent about 50 million Australian dollars, about 50 million US dollars, I should say, to both farm into the ground to get to the stage we are today, as well as buy some land. A difference between other salars and other countries in South America to the Maricunga is that we own the land freehold. So we own 52% of the project area, and we are the most advanced project on the salar itself. We have done 3 drilling programs over the period of time, and we've got a JORC resource of over 3 million tons of lithium carbonate equivalent. We have done an update to our DFS. We decided in middle of last year, or early last year, to do a staged approach to the development. And so we did a further drilling program and drilled deeper into the salar, doubled our depth down to 400 meters, and we increased our resource under the half of the salar, half our project area that we decided to focus on initially. From there, we had a DFS was finalised, and the numbers are very compelling. Let me just get to my sheet here, just so I don't get the numbers wrong, which I know them very well, of course. But the NPV, pre-tax NPV, is over a 20-year mine life, is close to $2 billion US dollars, 1.98 billion US dollars pre-tax, post-tax 1.45 billion US dollars. Look at the post-tax, it's about a 40% return IRR, and it's a 2-year payback period on the capex to build the project of 626 million US dollars. So it's a pretty compelling numbers that we've got there. We're fully permitted and licensed to exploit and to export lithium carbonate from the salar.
So can I ask you a question here? At what stage are you in the development then of this site moving towards actual production?
Good question, and the answer is very, very clear. We're spade ready. We're fully permitted with our environmental impact assessment report, which is not a small feat to get in Chile. We've got all our permitting, so now we're going down the track of attracting funders to help us build the project.
Is it your plan to build it out, or do you envision build it out and run it, or do you envision yourself vending into a larger, entity and getting them to take it to the next stage?
It's a very good question, and the answer is it's a blank bit of paper. We have got no big egos to be the next producer of lithium. We have got a non-binding MOU with Mitsui, the Japanese conglomerate, and this MOU was signed by Mitsui and us middle of last year, May last year, and it was announced to the market. That is non-binding, and until we finished our DFS, which was our updated DFS, which was released to the market in January, we were more on a holding pattern, because until we progressed with the DFS to understand the size of the project in more detail. Our first DFS was done a couple of years ago, and so we decided post-COVID to do a new DFS to get a clear picture. So those numbers I said originally, kind of 1.98 billion pre-tax MPV, gives us very much a clarity around where we are. Mitsui's MOU is far-reaching. One of the biggest things, Stuart, that we as a board decided that it was our strategy. We had many approaches from offtake partners, people who wanted to grab our production, but we wanted to first of all de-risk as much as possible the project, and then also we thought we know that one of our biggest assets is our future production. So to give away an offtake too soon leaves money on the table for our shareholders and doesn't give the right message for the project itself. So Mitsui have got an offtake in their non-binding MOU. It's been announced by the ASX in May. It's a far-reaching kind of MOU, which is for an offtake for project funding through their network of I guess banks and Japanese banks and European banks, as well as an equity stake in the JV company. So that is on the table. And now that the DFS has been finalised in January of this year, they're wrapping up their due diligence process with tests of our brine in Tokyo, for example, looking at all the different angles of where we are. But in saying that, we are getting also many inquiries from mainland China, Southeast Asia, Europe, North America to kind of are we available? And I guess until we walk down the aisle and say I do to kind of to Mitsui, we are open for any other offers. We are loyal to Mitsui. They know that we are very appealing, and we are very appealing. The most highly developed or highly advanced pre-production lithium project in Chile, and by definition also probably in South America. It's a very compelling time, and I think that we've got another 1 or 2 months of finalising the DFS, the MOU with Mitsui before we then commit to it. So in that time, whatever happens.
So always somebody's looking at jurisdiction, location, infrastructure. What's your cost of production versus market price for lithium? And lithium price is high right now. Do you have a good equation there, or ratio between cost of production in relationship to the current price of lithium on the market?
We have our cost in our DFS, which was done by Woolley and some tier 1 advisors. Our cost of production is about $3,700 per ton of LCE. So it's a very much a lower part of the cost curve, lithium cost curve. One good thing with us also is seeing that we own the land. There's no large royalties to be paid, and so that number is a real number, 3,700 per ton. Pretty good numbers.
And we don't have to worry too much about the demand for lithium as gigafactories around the world are coming online over the next 5 or 6 years.
Yeah, 100% right. And there's been a question, and there's always a debate about hydroxide or carbonate. And we have gone down our design we've got for our engineering, and the EPC process is in full swing right now, with two companies bidding for the engineering and construct, Bechtel and Woolley. And basically, we have decided that carbonate is the most logical process to go through. When you, I guess the lithium hydroxide is quite a volatile product, so to ship it any distance is difficult. So what we're finding in the market's showing that as well, is that unless you've got a CAFA factory or some kind of manufacturing very nearby to produce hydroxide to then transport it is a huge risk. So we will be producing high quality battery grade lithium carbonate on site and shipped down, which is only to the nearest port is about 3.5 hours drive. So it's very, very good infrastructure. As I said early on, Stuart, the infrastructure with the main highway between Argentina and Chile is going past our back door, more or less. So we've got very good infrastructure to the ports. And so, yeah, fully infrastructure. We've got power, we got water, all those things. We're ready to go. So it's spade ready for final investment decision to be made, and then it is then going to be a construction of about 12 months.
This is a good time for investors to be looking at the company.
100% right. With our current VWAP is around high 70s, early 80s, kind of Australian cents. This is not dollars, unfortunately. And we've had 3 different research papers done by Canaccord, by Arrowhead in the States, or Canaccord in Australia, and Arrowhead in the States, and Edison's in the UK, and the range is between $1.10 to $1.20 is their target price right now, based on our last reports. We know that once we finalise and ink a deal with Mitsui or whoever may finalise with us, then the share price is going to get turbocharged, powered by some very good lithium.
It's a pretty exciting time for you. I hope that you'll come back in a couple months and give us an update, because I'm sure there's a number of viewers who are going to say, okay, I want to know more. So I thank you for your time today and hope to see you again.
Thank you, Stuart. We've got a few things going on corporate-wise, so I'd love to see you again in the next little while.
Okay, wonderful.
Thank you, Stuart.
Thank you.